Okay, guys, welcome back to episode 17. So I'm going to just touch on supply and demand. So there's obviously, like anything in trading, many different variations of how to do something. So I'm just running you through the way that I do something. So let's just get my supply. So for me here, so let's just zoom in on specific price points and I'll let you understand why I consider them to be supply. So for me, it's more than just saying, oh, there was a big move away. You got to look at the overall characteristics of price. So for me, we've ran into obviously our 1.0 region. We had a relatively small trading day. So the day, this candle here for me, we're starting to see accumulation. So that's how I'm more looking at supply and demand, so to speak. So throughout here to here to there, so we had a moment of accumulation. That's how I'm going to basically call it. So let's just put this as orange. So price was going up, it started going sideways, and then we saw a massive redistribution of price. So we saw a massive sell-off. So that is where, for me now, sellers started selling. So this is where the origin of our sales come from. So how I approach it is, I know throughout the markets and my studying of the markets that manipulation occurs where they buy into short positions. So by knowing that logic, the candle previous to the candle that actually went down, so the bullish candle, I'll extend that across. So from the high of the candle to the low, some people do the body to body. Yeah, again, it's up to you, but I just do the candle high, candle low, because essentially what I want to see is the whole supply zone. So sometimes you see me have a fib like this, which is, let me just show you the fib. So sometimes you see me have a fib called risk and reward fib. So essentially what I do with this fib is, if I take that supply zone, not so it doesn't get too messy, is I map out the supply zone like this. And then I would say to myself, all the fib levels now, they just become targets. So if I enter at 0, which would be here, so let me just get this together. So if I enter at 0 right here, because I'm saying it's touched my supply area, then my stop loss, just like my fib, will be at the top. And then you see here, you can see that will be 0.5, 1%, 2, 3, 4. So like you see, we could have got around 3.5%, 3.6%. Now this middle line is 50% level. That's basically like what I call the sniper. So that's the price area where, for me, that will be the best time to sell based on my supply zone. So how does this come into my overall strategy and how I trade? So where we look at my fib, again, it's all about how you do something. We're building up confidence. So let's just pull it back to, for example, let's just pull it back to here. So we're building confidence. So I can say to myself, we've got a nice A, we've got a nice B. Where's the highest probability where we could see price coming to? So let's just break that down now. For me, obviously, the way you guys already seen how I trade now, I'm looking for retest into the previous support and resistance region anyway. So where we had support before, I'm looking for price to at least come back somewhere into that previous support. It's always going to vary where it is. It's always going to be different. No two trades are the same. But essentially, that's what I'm looking at. We've had a nice breakout. I'm looking for some sort of retest. It could even come into this region here. But essentially, I know 100% I'm looking for price to come back up into 61, 70, anywhere up into here. But for me now, our invalidation is above this high. So that's our invalidation. That's, we've got this trade wrong. Let's reassess or let's move on. So that's invalidation right there at 1. So my ideal area where I want to get into this trade now, because of the overall formation I'm seeing and the price action I'm seeing, is now going to want to be at this supply zone because it's so high and it's close to my level of invalidation. and it gives me the best risk and reward. So what you can do is with it, with obviously supply, and obviously even with my strategy, is you can just set a limit. So I can say to myself, if price comes into that region here, I'm gonna set my limit like this, and you can have your target back down to the lows if you want, or just below. As you know, price usually will go a bit further. So as price plays, you see we're pushing up, so now we're in. So straight away you had a perfect entry. Price now trades down, so that was almost a lovely supply and demand. But at that time in the market, we've got this area of support. So this is not a demand area, this is the area of support. We can see 1, 2, 3, 4. So price came into here, which you can see with it obviously still giving you a 3.3. Watch again, price comes right back up, but this time comes a bit higher into the supply. So you can see on this occasion, moving into manipulation, now we've done what I mentioned previously. We've now taken out this high because we made that higher low. So it's showing you a willingness to move higher, but it's just a potential manipulation. We've taken out this high because this supply zone is still valid until price pushes right through it. And what do we see happen? Price comes up again. So this for me is indicating now that US dollar Swiss franc, sorry, always get them mixed up. US dollar Swiss franc has some strong buyers in the market because that's a series of higher highs and higher lows now. So now we push up. What do we see? We've gone straight into the supply zone. We've practically taken up the whole zone. So that's not what you want to be seeing happen. So for me, the supply in this area, or the sell, because all a supply or demand area is an area where there's a lot of sell limits. So a lot of market participants have sell orders here. So in this region, they've got sell orders. But the higher it goes into a region, the more orders get taken. So there's less sellers in the market. So here, there might have been a lot of sellers, but we've come into it now. So a lot of people have come out the market. So if you look at it like this, so let me just explain it like this. So let's just delete these. So if you look at it like this, so we've got, say, one, so say here, 1, 2, yeah, just say a strong supply zone is going to be like rated like 5 stars. Just almost say 5 stars a strong supply zone. So when we've come into here and we've had such a push down, just say that weakens the supply zone. So we've 2's gone. Then we've got another deeper pullback into that supply zone. So that will take another 2 away. So this supply zone is now becoming weak. So you can see it's becoming weak. So the buyers are pushing through it. So we've already gone through this whole supply zone. So for me, this supply zone's finished now. We're looking at a completely different setup. We're looking at now stop hunt, can price close above 1.0. It's a completely different ball game now. So for me to look at some other areas of supply, I'm trying to do the ones that stand out to me so you understand what I'm looking at. I'm not going to go for the proper technical ones, just the ones that stand out to me, because I'm very specific in the ones that I would use anyway. So in some instances, again, like I said, do things your own way. In some instances, what I want as a supply zone is an area of consolidation that leads to price breaking out. So you can see here, we had a massive rally up into this area. Price did what? Consolidate, and then we got a large move away. So for me now, that's a valid area of supply. We've got strong sellers in this market here. We haven't had any return back to that area because it's an area of imbalance. When we apply our fib again, what do we see? A, B, C comes into our 87.93 and we get price hit our target. So that's how I utilize supply and demand into my trading. So let me see if I can find any other examples. I'm not trying to go back too historically. I'm trying to stay more into recent price. Daily demand zones are quite strong. The higher the demand zones they are, the higher they are. They're quite strong. Let's have a look. So let me drop down into 4 hour, because most likely to see more supply and demand in 4 hour. That's how the market moves. So let's have a look here. Any supply demand? No, I don't see any in here. No, I know when I see them, to be honest. I think there was one here on US dollar CAD, if I remember correctly. I'm just kind of go through memory of the ones I've pointed out to you. Yeah, so for example here, even on the hour chart, this for me here is a supply zone. I'll explain why. Right here in this candle, you see you've got that pause. It's all about that pause and how big the move away was. So you see, we started selling off. So we just had a natural sell off anyway. So price started to sell off. But when we broke here, we didn't initially just sink. We consolidated and then we had a massive drop. So what you see is straight away supply and demand. So for me, like even like here, this is like a strong demand area, but it didn't come through because of the overall market's bearish. But you see here, strong pullback. We got the demand because we had a consolidation. Price rallied straight in here, but that was news driven, that was fundamentals. Rallied straight back into that supply. So if you're going to, again, use that area of supply, high to low, you can see you had a nice pullback, almost 93. So when you're looking at your risk to reward, think of it like that. You could have had a nearly 10 pip stop loss and you could have hit a target of 150 pips. So almost 15 to 1. So when you do see the supply zones, for me, if I'm on a bearish pair, all I'm looking for is supply zones. I'm not looking for demand zones. So majority of the market's been going down this year. That's why there's not really much. But even for example here, okay, this is a great example on US oil, and it ties into what I mean about manipulation. So you can see US oil here, price dropped down, pulled up, consolidated. So you see the way price action gets for me, it's just my eyes can see it now, but you see the way we've gone down, then it starts to go sideways, then you just get a massive rally. Price returns right back into it. So you see it wants to come back into that area of supply because the equilibrium shifted now. There's an imbalance in the market, and that's what I'm essentially using my fib for. When I'm seeing it pull away, I'm highlighting the area where I'm most likely to see price return to, and then I'm looking for targets. So you can even see here with oil, we could have hit all targets. All targets could have been hit. So if we went long here, our first pullback into that demand, 50 pip stop loss, and we could have held that for nearly 400 pips. So that could give you a 7 to 1. So when you do see those areas of supply and demand, it's just about getting your eyes adjusted to seeing what you need to see. For me, I like to see, you probably get some different examples. I like to see like a smaller candle, a bit of like consolidation almost, and then a massive move away. There's many variations of supply and demand, like I said, and if you research it yourself, you'll see there's no one way that anyone does it. But for me, this is just what I've seen work. This is what I've seen work in the market. So it's kind of like I trust the way it occurs. I'm just trying to see if I can find any more. So for example, even like here, UJ, you understand the characteristics of what I'm saying. That candle before, price comes right back into that supply. You see, it comes right back into the supply and then we drop off, but not too much. But you can see the kind of entry, the kind of risk and reward you can get. The lower time frames you go, you're going to see more and more supply zones. You're going to see a lot. So it's just essentially the way I use it is at the origin of the move. So where we got that big move from, I'm looking for substantial moves. I'm not looking for just little moves. I'm looking for substantial moves. So you see even like here, candle before, massive sell-off candle. Candle before, massive sell-off candle. Then you see it's still active. So when you're looking at gold, you can still see we're still potentially in areas of supply. It's just about how much of the supply has been used up and how strong is the supply zone. Obviously, there's no way to know, but you understand your overall bias. If you get above 1550, then you're 1557, then you know gold's going to go gold's going to go bullish anyway. So it's going to continue to rally, to rally, to rally. It's just giving you areas of where price potentially should stop from. Right here, you got the demand zone here on gold daily. So you see the characteristics, bit of consolidation, that candle before, and then we've gone massive move away and we've gone bullish. So that's how I look at supply and demand. I'm just trying to see any kind of lower time frame ones, because the lower time frame ones, you get even here, this is a nice battle of supply and demand. So you see here that candle before, we had a strong push away. So it's just about a strong push away. That candle here pushed up. Look at the candle that comes out of it. A nice strong push. Comes right back into it, drops off. Where did we come right back into? Again, it's a little bit hard to pick out, but you're looking for the areas in the market where you're getting massive pushes away. Because of the previous candles, you see liquidity gets lower. So you see small candles, massive surge. Then you look at the way euro yen is battling right now between supply and demand. Demand stepping in around 121, supply stepping in around 122.5. So that's essentially the equilibrium of the market right now. And then if you use your fib tool, there's different ways to look at this. This is essentially giving you the understanding of what is low for euro yen, what is high for euro yen, and what is considered fair value. So around 121, you're usually seeing it push higher, or it's a midpoint that you're seeing price bounce below. You see it breaks it, then we drop down into demand, breaks above it, pushes up into supply. Well, I'm trying to see any others. They're more easy to spot in live markets when I'm actually looking at that trade. But hold on a second. There's a few. Euro, New Zealand. No, let me scan the cross market. So even on the cross market, I'll give you an example of pound Swiss franc, because that's a trade I'm in. So pound Swiss franc, you can see here. Put this on my social media. The candle before. Look at the sell-off. That's what you need to look at. The sell-off that comes. We had a bit of massive bullish candle in the middle. Then look, massive sell-off. What happens? Price comes right back into it. And then when we look at our risk to reward, look at that entry point. So that's why I got that entry, because I was looking at the supply like I put on my socials, and then you see price ran straight into it with that area. And then now I'm looking at further downside. If this level breaks here, we're going to see a lot more downside. And where could we see the downside? We have to look again. Where could we see downside potentially come down into? So we see buyers stepped in around here. So we see buyers did step in around here. We got a nice sellers entered, buyers entered, and we rallied up. So that would be my next kind of area where I'm looking for buyers to step in the market. I'm just trying to scan a bit more. Even like here, for example, on supply, even here on New Zealand Swiss franc, it's very similar to support and resistance. But you're looking for points in the market. Like for me, there's no supply here. You didn't see like a small candle, like price slows down, and then you see that massive push away. So then when you look at your fib now, so you can use it like that. So that will be your first entry, or your best entry will be in that 66256. But then now I use my normal fib and look at where that aligns with. So where's the best point to get in that? So that's aligning for me, set 82.8. So that's where I'd look to say, okay, 82.8, that's a great entry. Stop loss 88 pips, target down here, and you see that builds you a 6.3 risk to reward. Any other examples? On a daily? No, there's no real examples on the daily. But I think, like I said, you're just looking for some price decelerating, and then you see a massive pickup in volume. That's where you're looking for price to return back to. Just scanning the 1 hour to see if there's any. That's where you're looking for price to return back to, and then you're looking. See, you can see examples of what I'm saying. See, price slows down, massive rally. Price slows down, we get the sell off. Then other than that, it's just prices bouncing between supply and demand. Any other? So our fib basically just ties into this. It ties into this move. That's how I look at it. So even like here, you see here on Euro Aussie, you see the characteristics of what I'm saying. Price slows down. So you see price slow down and then sells off. Then look, we're looking for that retracement back in. And in this occasion, it didn't make it back into the supply, but it builds the trade for us. It just gives you a good indication of where supply and demand is and where your invalidation should be. It's not always going to be present when you're using the ABC pattern, but it just gives you an additional confluence of knowing if an area is strong or not based on the characteristics of the trade. So even any others? So I'm just scanning that 1 hour just to see if there's any others, but just to give you a few more examples. So you see, it's no coincidence where you see markets start to bounce from. That's why I'm saying to you, you have to see, look, we had low volume, massive buyer step in, it comes right back down. So more often than not, you see reversals, that full reversals, when you're on the hour charts. You're not going to see full reversals on majority of that daily, weekly charts, because it's a lot to manipulate, like I said, unless there's a major fundamental catalyst. But on the hour chart, it's only a manipulation of a few pips, and it will just spike it back into that area, and then you'll see the demand or supply come in. But like I said, if I do find any more high probability examples of it, I will obviously make a part 2 to this video. But it's not the be all and end all anyway. It's just that sometimes you'll ask me why have I got a zone there, or for example, and that's more often than not what it is. It's just for me mapping out, say, the supply and demand of the areas. It's just almost like the higher lows. For example, like here, you see price starts to slow down, massive push away. Price starts to slow down. You see price slowing down, massive push away, massive push away. So it sometimes it ties in with your just ABCs, but more often than not, you will see price consolidates, we get the rally. Price gets choppy, we get the rally. Then it pulls right back into that area. So even when you're looking at Aussie here, you can see pulls back just shy of it, just shy, but then we end up hitting targets. And then now for Aussie, I'm just expecting Aussie to pull back a bit further. So expecting some sort of pullback on Aussie, maybe potentially into this support or resistance area, and then see where it goes from there. But I hope you kind of got a little bit more clarity on what I deem as supply and demand. Like I said before, there is no right or wrong way to do stuff. It's just about how price is always going to tell you if you're right or not. And more often than not, the way that I draw the levels, more often than not, they're right. So even here, now for me, that's a supply area. So even in the future, if say US dollar CAD trade moves a bit higher, I know coming into that region here, I'm potentially looking for shorts because we've had a consolidation and strong push away. We've even got supply here. If we get above this, if we get above supply, it turns into demand. That's one thing you need to understand, just like support and resistance. When this price is below it, it will be obviously supply. But if price gets above it, it turns into demand. And then it will push through. Just like, for example, even on this occasion here, supply got above it, demand, and it caused that stop hunt. So I hope you guys enjoyed this video, and I'm going to move on to the next one of different ways to enter the market using the A, B, and C, because I know a lot of you like sometimes have said to me, can we enter on the B leg? How would we do so? So I'm just going to give you a few examples of different ways to enter the market and then build on from the actual trade management now. So stay tuned for the next videos in the series.